Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FXPesa. So today we'll be talking about the one thing that is clearly driving the markets, and that's a nation called Greenland. So still, Trump is really pushing to acquire Greenland and have America control or run Greenland. And that has become a hot topic in the markets, basically eventually influencing the performance of stocks, stock market indices, and at the same time, we're also seeing reactions on precious metals such as gold and silver. So once you join in, kindly say hi in the live comment section. These will confirm that everything is working just fine. Also remember that this session does not constitute any form of investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So good morning, Mr. Patrick. I can see you in the house. Limo in the house. Lucy, Night 88. Thank you for joining. I can see Austin in the house. Thank you for joining. So we'll be starting shortly. All right. So first things first, let's look at the economic calendar, try to understand what is in store for us. So there's quite a number of things happening in the markets today. And as you can see, one of them is that the markets, especially the New York Stock Exchange and NASDAQ markets will be reopening today. And that is after yesterday, the markets were closed following the Martin Luther King Jr. Day, which was a bank holiday in the US. So for futures as well as stock markets that are not open, but then we'll be expecting a lot of activity in the markets today. So Forex markets were running as usual, as well as index derivatives. So we'll be following up closely on that. We also had inflation report coming in from Canada, which basically met expectations with the trimmed CPI, which is the Bank of Canada's favorite measure of inflation, coming in at 2.7% as expected, but also a slight slowdown from the prior reading of 2.9%, which was an upward revision from 2.8%. So fast forward to this morning, the People's Bank of China decided to hold interest rates steady at 3% for the 1-year loan prime rate and 3.5% for the 5-year loan prime rate. So nothing much of a change. It was as expected. Then we had the job market report from the UK. That is the claimant count change, or basically jobless claims, basically increasing to 17.9 thousand, up from a negative 3.3 data point reported in the prior month, 3.3K. So this is a big rise in the jobless claims. Average earnings index came in at 4.7%, slight slowdown from the prior reading of 4.8%, also slightly higher than the expected 4.6%, whereas the unemployment rate remained the same at 5.1% as expected, and of course the same as the prior number. So there's more on the job market report from the UK. I'm trying to get some article I had seen around the same. So UK labor market lost more momentum before the budget. Hoping that everyone can see this. So Britain's jobs market weakened in the run-up to November's budget announcement by Finance Minister Rachel Reeves, according to the official data published on Tuesday, which showed a drop in employment and a cooling of wage growth. So deeper into the document, you'll notice that a measure of payrolls data from the tax office showed a drop of 43,000 jobs in December from November, the biggest monthly fall since November 2020, although there have been bigger preliminary estimates of falls in that period, which was subsequently revised up, an ONS official said. So a fall of 38,000 jobs first reported for November was revised to show a decline of 33,000 people in payroll employment. Annual pay growth in the private sector, excluding bonuses, which is being closely watched by the Bank of England, slowed to 3.6% in 3 months to November, its lowest rise since the November 2020, from 3.9% in the 3 months to October. So overall, core pay growth slowed to 4.5% in the September to November period, compared with a year earlier, and slightly below 4.6% growth reported in the prior quarter, in line with economists' expectations in a Reuters poll. So the jobless rate held at 5.1% as expected. So the number of employees on payroll has fallen again, with reductions over the last year concentrated in retail and hospitality, and reflecting ongoing weak hiring activity. And this is the keyword for today's report, reflecting ongoing weak hiring activity, which is something that the Bank of England is really concerned about. And if there is a weak hiring, and it might end up into a factor in the inflation calculations for the Bank of England. So the Bank of England is watching pay as a gauge of how long Britain's still high rate of inflation is likely to last. So financial markets on Monday showed at least 1/4 percentage point interest rate cut was fully priced in for this year, with a roughly 2/3 chance of 2 cuts. So clearly, we are still expecting more rate cuts from the Bank of England this year, but the market is only pricing one, and a 75% chance that there will be a second one later in the year. So that's the report from the UK as of this morning. And now we look at other data points that we'll be expecting later on in the day. So clearly, we'll be getting a speech from the Bank of England Governor Bailey. That will be at 12:45 p.m. The World Economic Forum annual meetings will be entering day 2 today. And of course, we'll be expecting Trump to visit soon, and Trump's visit will be more pressure about acquiring Greenland. So that is expected to be a key market mover. So the ECB, or the EU leadership, the European Union leadership, is expected to convene an emergency meeting on Thursday to discuss the pressure that Trump is adding on the EU to allow the US to basically acquire Greenland. And that's a key driver in the markets as of today, because Trump is threatening all kinds of tariffs. In fact, when he saw the Prime Minister of France refused to support the US in acquiring Greenland, he threatened to implement sanctions on their wines and champagne exports. So clearly, we will be seeing the markets reacting to this. For instance, if you know of a company called LVMH, Moet Hennessy, Louis Vuitton, French company, is already down 10.41% year to date. And as you can see, the big drop started on the 9th of January. And since then, there has been a consistent push downwards. And some of the last downwards performance may have something to do with what Trump is already threatening. So we will be expecting more fireworks from Trump. So let's try to look at some of the key headlines in the markets as of this morning. So Trump threatens tariffs on French wines to get Macron to join Board of Peace. So US President Trump said he will impose a 200% tariff on French wines and champagnes, a move he claimed would push French President Emmanuel Macron to join Trump's Board of Peace initiative aimed at resolving global conflicts. When asked by a reporter about Macron saying he will not join the board, Trump said, "Did he say that? Well, nobody wants him because he will be out of office very soon." So clearly, that continues to dominate the markets as of this morning. Also on the gold side, we know that gold scales a new high past $4,700 per ounce as Trump threats fuel safe haven demand. So that's a key headline as of this morning. Stocks fall, dollar struggles as Trump's Greenland gambit rattles markets. Stocks slid on Tuesday. The dollar fell for a second straight day, and U.S. Treasury yields climbed to 4-month highs after U.S. President Donald Trump intensified his push to take control of Greenland. Trump's threat of additional tariffs on European nations if a deal on Greenland is not reached has revived talk of Sell America trade that emerged in the aftermath of his sweeping Liberation Day tariffs. That was on April last year, levies last April, where investors sell US stocks, dollar, as well as US treasuries. So trade appeared to be gathering momentum in Asian hours on Tuesday. Investors were also scurrying for safe haven assets, including the Swiss franc and gold. So Nasdaq and SP 500 futures slid over 1%, while the dollar was broadly weaker. And the yield on the 10-year US Treasury rose 4.265%, its highest level since early September. So for those who are new to commentary and understanding on the bonds market, so when the yields are on the rise, it means that the market is generally selling or dumping the bonds. So in this case, there is that inverse relationship. So when everyone is selling the bonds, the yields tends to go higher. So when you see the treasury note that is 10-year moving to 4.265%, it's not a good thing happening in the markets. It's more of a red signal. So European futures were 0.27% lower, pointing to another subdued open after the pan-European stocks 600 index fell 1.2% on Monday. MSCI's broadest index of Asia-Pacific shares outside Japan was down 0.24%, inching further away from the record highs it hit last week. So I'm trying to see if there's anything else we missed. So on the fund side of Twitter and what's happening around the world, we know that Elon Musk is teasing to buy Ryanair Holdings. So far today, the stock is up 2.08% on the prospect that Elon Musk, the richest man in the world, could be looking to buy Europe's biggest carrier. It's one of the biggest airlines in the world, and it handles most of the air travel business in Europe. So in this case, it would be a very big positive if Elon Musk was to buy the stock, which is up around 63.94% in the past 1 year. So currently trading at around $68.28 dollars per share. It will be a stock of interest, especially this week. So I'm still checking to see if there's any other headlines we could have missed. So yes, Europe is not in favor, largely in favor of Trump acquiring Greenland. So in this case, there's speculation that the EU might consider adding their own retaliatory tariffs against the US. And Europe can wield this $8 trillion Sell America weapon as Trump reignites a trade war over his Greenland conquest ambitions. So as the EU weighs options to retaliate against President Donald Trump's latest tariffs, its most potent weapon may be in financial markets. France is already urging the EU to deploy its anti-coercion instrument, which can target foreign direct investment and finance as well as trade. That's after Trump announced new US tariffs on NATO countries that send troops to Greenland amid his plans to take over the semi-autonomous Danish territory. So at face value, 10% tariffs rising to 25% would have minimal economic consequences. Capital Economics chief economist Neil Shearing said in a note on Sunday, estimating that they would reduce the GDP in the targeted NATO economies by 0.1 to 0.3% and 0.1 to 0.2% to US inflation. So the political ramifications would be far greater than the economic ones, he warned, with any attempt by the US to seize Greenland by force or coercion potentially leading to irreparable harm to the NATO. So far, European officials have signaled Greenland's sovereignty is a red line that's not up for compromise. Trump administration isn't budging either on its stance. So the US has a key vulnerability the EU can exploit, according to George Sarvelos, head of FX at Deutsche Bank. Europe owns Greenland. It also owns a lot of treasuries, he wrote in a note on Sunday. Holding those bonds helps balance America's massive external deficits, and Europe is the world's biggest lender to the US. For example, offsetting the US trade imbalance requires heavy inflows of capital from abroad. Meanwhile, the Treasury Department must also finance budget gaps by issuing more debt, often to foreign investors. European countries own $8 trillion worth of US bonds and equities, almost twice as much as the rest of the world combined. Surveillance pointed out, in an environment where the geo-economic stability of the Western alliance is being disrupted existentially, it is not clear why Europeans would be as willing to play this part. So that's a developing story. Of course, as we mentioned, there will be an emergency meeting on Thursday to further discuss how Europe reacts to the Trump's pressure to acquire Greenland. So other than that, I don't know if there's any other key headline worth mentioning. We already mentioned that the World Economic Forum opened in Davos yesterday, so it's getting into the second day. So US President Donald Trump, that visit to Davos as president comes as US allies worry about his ambition to take over Greenland. Latin America grapples with his efforts to rape Venezuela's oil, and business leaders and lawmakers at home express concerns about his hardball tactics toward the Federal Reserve Chair Jerome Powell. So, of course, this time the World Economic Forum opens without its founder, that is Schwab. Trying to see any other relevant headline. So, stock market is expected to be explosive today. On the Forex side, if you look at performance, there is two weak currencies as of this moment. Sell America trade means that the dollar is very weak, and also the Japanese yen is very weak. So on the yen side, there's a reason this is happening, and it has something to do with the bond market. So if you look at the Japan 10-year government bond yield, it hit a record high, the highest in 3 decades, of 2.348%. So that's the yield on the 10-year bond, which a few years ago was capped at 1%. So Japan's 10-year government bond yield ride above 2.3% on Tuesday, marking its highest level in nearly 3 decades, amid concerns over Prime Minister Sanae Takaichi's proposal to cut the sales tax on food to 0%. Investors fear the plan could increase fiscal risk, as it remains unclear how the government would offset the lost revenue. Takaichi also announced that she will dissolve parliament at the end of the week and hold a general election on the 8th of February, in which her party is expected to secure more seats and push forward fiscal expansion and other policies. So market attention is also on the Bank of Japan's policy meeting this week, that's on Friday, where rates are widely expected to remain unchanged following December's hike. Investors will watch closely for hawkish signals from the Bank of Japan Governor Kazuo Ueda, amid speculation of a potential rate increase in June. So rising bond yields in Japan means that their bonds are being dumped, and as a result, what we are seeing is weakness in the JPY. So if you look at the currency's performance as of this morning, the Japanese yen is among the weakest compared to the dollar, whereas the strongest currency as of this morning is the New Zealand dollar, which is up 0.71% against the USD. Also, the Swiss franc is up 0.63% against the USD. Trying to see if there's anything else we may have missed before we get into some technical analysis. All right, I believe that is it. So on the earnings side, we know that there is a lot of companies reporting earnings. Last week it was the banking sector, but slowly we are sliding into the tech sector. So far, the biggest earnings expectation for the day is Netflix Incorporated, which will be reporting earnings after market close. That is today. So 3M company from the UK will also be reporting its earnings later today. US Bancorp, First Tunnel, Dr. Horton, United Airlines, Interactive Brokers, Fifth Third Bancorp, Kickhop, United Spirits Limited, and Zion's Bank Corporation. So clearly, the main focus will be on earnings from Netflix. So put a close watch on that. And also remember that the stock market is just coming back online after closing on Friday. And Monday, we didn't have a lot of activity due to the public holiday that was going on. So that being said, let's try and get into some technical analysis, try and understand where the charts might now be headed next. So I'm trying to load my MetaTrader 5 trading application. Remember, this is the app that we use for trading on a desktop. So if you're very new to this, then you should know that we use the MetaTrader 5 trading application when you're trading on a desktop or a laptop. And if you prefer trading using a smartphone, make sure to check out the Equity Trader by FXPesa. It's available on on your Play Store as well as your App Store. So I'll write the app name on the comment section. So make sure to check it out. If you like it, install, sign up, get your account verified, and then start trading with us. So for a link to create a trading account, check the links in the description below. And notice that these sessions happen every day, Monday to Friday at 11 a.m. So this is where we get to discuss what's impacting the markets for the day. And once we cover this, we do some technical analysis, and this way you're able to identify trading opportunities for yourself. So that being said, the chart right in front of you is a chart that we've been closely following for some good time now. This is the US 500 chart. This is tracking the S&P 500 index, and so far you can see we had this form of wedge, which was slightly bullish. Whenever you have a pattern like this, think of an estimation of the overall direction in the market. So there was an overall bullish momentum in the market. But then if you look at the size of the moves, they were bigger and then they kept getting smaller, indicating that volatility was getting weaker and weaker. And then eventually we had the breakout here. Our market pulled back and now we are on a free fall. So this free fall happening as of this morning is as a result of panic, the sell America trade, as a result of Trump's pressure to have the EU release the control of Greenland to the US. And as a result, what we are seeing is a big panic sell button. You can see the big gap, weekend gap here, a sharp drop, kept going down yesterday, not even an attempt to close the gap, and today a continuation of the same, showing that this market is selling out of panic. So potentially, if we breach this particular bottom here, then we could run for the previous low. That's around 67.29. So that could be a potential next target if this panic selling continues. So also remember, if you've been part of trading since last year, when we had the Liberation Day tariffs, we know that all this panic selling almost always ends up in a V-shaped recovery. So Trump always chickens out. So that has been a key trading mantra over the last 1 year. So even if you see this kind of panic selling, we know that these markets usually often recover. I would have an expectation of the same. So you also look at the NASDAQ index. It's also almost the same thing as the SP 500. So we discussed this last week. You go to the 1 hour time frame, we had a break towards the lower side. The market got back up. Then weekend gap here. Yesterday, the market kept going down. As of this moment, we are seeing even more pressure, more panic selling happening here. So perhaps maybe the market will get some relief from Netflix earnings after market close. But then right now, it seems like for Nasdaq, we have already breached this particular bottom, which implies that we could be headed much lower. And by much lower, I mean to the bottom of this wedge here, somewhere around $24,718 per share. You look at the sideways momentum that we had identified here on the Dow Jones Index. Here, it was safe to trade within the range, selling when it was on this side and buying when it was on this side. But now we have a clean breakout here, which implies that the momentum is now headed lower. And whenever you have such a big move, such as this one, and then the market gets into a range, once we break towards the lower side and get back into the bearish momentum, it's usually advisable to target the base of this pattern where the move eventually originated. So for short sellers in the Dow, a nice target would be 48,427, which I believe would be achievable. Perhaps even this could be our chart of the day. So on the other hand, you look at metals. I remember we had this discussion last week on Thursday, and this was around the sideways momentum we were observing in gold. So nothing much was happening. We had just identified this area as a buy zone. So the price action around 45.50 and 45.69 would be a buy zone, and then we target the upper side of the range. Sorry for that. But then we broke towards the upper side yesterday, and now the extended rally in gold into a new all-time high as of this morning is as a result of people fearing that this tug of war between the EU and the US about Greenland might continue to, I would say, increase uncertainty in the markets, and as a result, investors go for safe haven assets. So in this case, we don't have candlesticks on the left, so only bullish momentum playing out here in gold. So pullbacks are really nice, so we don't always want to buy at the very top, especially for a market that is hitting new all-time highs. So any pullbacks will be very much welcome for a continued bullish momentum in gold. So as of this morning, it doesn't seem to be stopping. So there seems to be a consistent push higher and higher, following what we saw here. That is, after yesterday's open, I noticed there was a big jump from this area here to this point here. And then we traded sideways for almost the entire day. And then today a break, and the market is just pushing higher. And if you're looking for candlesticks on the left, there ain't any, which means that this is a market that is on total bullish control. So same thing is happening to silver, only that for silver, we're just witnessing the breakout as we speak. So we go to a smaller time frame, let's say the 15 minutes chart. You look at yesterday's jump at market open, and then the preceding price action. Then you notice this was the high as of the morning, high as of the evening, and now the market is approaching the same area. So a potential breakout is in play, and once that breakout plays out, you will know exactly how to allocate. So more than likely, we should be looking at a bullish momentum on the break. So if, let's say, the market breaks here with strong momentum up, then it means that we are going for a new high on silver. So potentially getting to 96 or even $97 per ounce of silver. So clearly on the 4-hour time frame, daily time frame, we know that there are no candlesticks on the left. So we are only left to play with what we have here. So in this case, potential extension of the bullish momentum would likely land on a random whole number. So right now we are trading at 94.8. So clearly targets would be at 95 and 96. So let's see how it plays out. On the oil situation, we know that oil was clearly on a bearish momentum. Then we had a big break which went straight to our resistance, which was the base of this particular trend line. Immediately we got here, the market reversed, and now there's no fear or panic anymore. So we resume the bearish momentum in oil. And from the 1-hour time frame perspective, you can see that something is shaping up here. Let's go even smaller. This is 15 minutes, and you can see that something is shaping up here. So this was Friday's high, yesterday's high, and today's high. So clearly some form of bearish trend line. The market is finding resistance, and now we have a key level support to break, which is yesterday's low. So the market could potentially breach yesterday's low, and once we breach that, then that means that from the forward time frame, we could be looking for a push back to mean. This trend line could still be relevant in this current momentum, where the market could potentially drop to around $61.5 per barrel. So apologies for my chart being too noisy and having too many lines. European equities are also on a free fall. The DAX, or the DE40, is also on a free fall. So from the forward time frame, you can see the sharp drop. Of course, if you look at the prior highs, then there is a good chance that we might be headed for yet another target here, which is around 24,502 euros per share. The EU50 is still on a sharp drop. In this case, estimating that we'll get to a previous resistance now and support around 5,816. France 40 also on a very sharp fall, much sharper than the others, of course, due to the tariff threats coming in from Trump. So possibly the panic selling could end at this key level support, which would be around 7,998. The Swiss stock market index is also on a free fall. So I think everyone is experiencing the sharp volatility coming in from Trump. So yes, let's observe if we happen to breach this area here, which would trigger even further panic selling. But for now, it seems like the market could find some support here at 13,136. So other than that, yes, we had discussed a stock last week. This was a Freeport McMoran, a company that is a major miner of copper, as well as silver and gold in the US. And we already got our pullback last week. So today could be the day we see the stock bouncing from key level support. We talked about high-grade copper futures last week. We saw a potential drop and support at this area here. This played out as expected. We got our key level support, and the market seems to be bouncing from here. So now we await to see if there's evidence of buyers coming in. And if we see bulls getting back into this market, then we target our potential new high. So not yet present, but then there's weakness in the bearish momentum. So if you are to zoom on this chart, let's say we remove all this, then you'll notice that there was this consistent push downwards. Here you can see that the market was really pushing lower. But then you look at the price action between Friday, Monday, and now today, then you can notice some familiar pattern here. I would say not that. Look at Friday's low yesterday, today, and you can see some kind of pattern formation here, where the market is now finding more weakness in the bearish momentum. So potentially we could see a break towards the upper side, meaning that this market could resume bullish momentum. Remember, from the daily time frame, we don't have candlesticks on the left. Yes, we have for the last couple of days, but then this was a new high for copper futures. So of course, we expect more bullish momentum. So right now, the market is trading within the triangle, just bounced from the lower side. So on the currency side, USD CAD, you can see how the dollar is losing to the Canadian dollar. So after finding support here for a couple of days, eventually breach towards the lower side. And now our new target is the prior low. Resistance now turns support around 1.38055. So looking at the strongest currency of last year, which was the Swiss franc, you can see how the Swiss franc is really gaining against the dollar. So a very sharp drop. We had identified this as a potential top last week. So now we are seeing the complete reverse. So a very sharp drop. Of course, we should be looking at targets around 0.78693. So the euro seems pretty strong, having a bounce from a key level support. So a very sharp rally that could potentially stop at 1.17280. This is a previous high, as you can observe from this point here. This was the last high that we saw in the month of October last year on the 17th. So that high could be our target for today. So the market is really pushing hard. So not a very sharp rally, but potential extension of this rally to 1.17280. You look at pound USD, you see the strong bullish momentum and an attempt to get to the previous high. So from the 1 hour time frame, you can see last week's high hit 1.34736. The market is really attempting to get that. And of course, if we reach that high, then the next target will be around 1.35302. AUD already facing a really strong challenge in an attempt to move higher. So you can see the dips are getting bigger, but the overall direction is bullish. So of course, the target is the high that we saw in the last 2 weeks, 0.67657. So still quite a distance, but then you can see the market experiencing some difficulty pushing even higher. But then the sell America trade is still on. USDN, this is the a battle between two two weak currencies. So not the favorite for the day, but then you can see that the yen is also making its own moves. And in this case, after the dollar tried to gain some momentum against the yen, here what we are seeing is some reversal of the same. So here a sharp drop, potentially looking to test yesterday's low. That's around 157.479. So Japan stock market is also not doing particularly well. So the Nikkei 225 index seeing their bonds on sale, and of course parliament being dissolved. The market doesn't seem to be taking that quite nicely. So we have already breached last week's price action. The prior week's strong momentum is being challenged right now. You look at this previous high, which was combined here and here, and the market seems to have breached the same, which implies that we could be seeing some further bearish momentum. But then usually when it's on a bull market, we normally expect breakout retest continuation. So this could also be in play despite the panic, a retest of this area before a continuation. So if this plays out, then it might be an idea to look for more short selling positions. The FTSE 100 index, the benchmark index for the UK stock market, is also facing some selling pressure. So the selling pressure could extend the bearish momentum to around 10,048 price action level. And the Hang Seng index is not being spared either. So after hitting a key level resistance, and we identified potential short selling opportunities last week, now we are seeing these happening in action. So good chance that this extends to the low that we saw in the previous week, not last week, the previous week, around $26,077 per share. So that is it from my side. I'll be checking on the comment section to see if there's anything we missed. Once we cover this, hopefully everyone will trade from an informed perspective. So good morning, Emmanuel. I can see Munyi Muthoni. Good morning. There was a comment about my volume. I should be able to tell you that my audio settings are set to maximum. So audio for me is at 100%. So a good question, why has the internet gone crazy on Japanese yields, and why should investors be worried or not? So I think we already covered this. We covered this here. You can check the article on trading economics. Yes, this one. So yeah, so this is where we discussed that investors fear that the plan could increase fiscal risk. The Prime Minister of Japan, Sanae Takaichi's proposal to cut sales tax on food to 0%. So this was the clear red line for a lot of investors, and they began dumping Japanese bonds. They feel like the government couldn't handle the pressure. So that was the trigger point. Yes, on the case of the Supreme Court, if there's nothing that was passed, then that means that Trump continues collecting collecting tariffs unopposed. So, how does the dollar affect Nasdaq? I don't know. These are two separate asset classes. The Nasdaq tracks stocks, and the dollar is basically a currency, world reserve currency. So the relationship between the two is not that sharp. The only thing you need to know is that Nasdaq shares are priced in dollars. So when there's a change in the value of the dollar, of course there will be a change in the value of the shares. So they are usually moving in the same direction. So a bet on America would be a bet on the dollar and a bet on the US stock market. So usually they move in tandem. So since assuming power, Trump has been using tariffs. Does that mean that the tariffs have been tied to the national sovereignty? Yes, it's this administration's policy. So if their policy is to use tariffs in order to drive forward American interests, then as per Trump, he said so be it. So he's been using tariffs. That was his campaign front, and he's going to tariff everyone and make America great again. So far, we have seen it in action. I don't know how it's impacting the US economy per se, but he has twisted out of governments to strike pro America deals. So this includes what we have seen with China, with Venezuela, with the EU, with African nations, and so on. So I believe that was the last question and comment. Thank you from Derek. Mzee unatrade vitu deadly. Thank you, Colonel, for tuning in. So I believe we have captured almost everything that was there to capture for the day. So enjoy the rest of your day. Make sure to like and subscribe to the channel. If you're watching this on X, like, retweet, and drop us a comment. Remember, this happens every day, Monday to Friday, where we get to cover what's happening in the markets. If you haven't checked out the latest episode of the Bullish Banter podcast, make sure to check it out on what's happening in the markets. An outlook on gold, silver, Bitcoin, AI, and what traders are watching, especially this first quarter of the year. So make sure to check it out. It's available on FXPesa YouTube. Search Bullish Banter podcast on YouTube. You'll find it. You can go through a couple of previous episodes, and always feel free to leave us a comment and a review for the podcast. On top of that, if you're just a beginner and you want to learn more about trading, so go to FXPesa on YouTube and then search for Novice to Pro. You can go to playlists, and then from the playlist, you can scroll, look for the Novice to Pro by Rufus Kamau, check it out, go through the course. It takes you right from the introduction to trading, charting skills, tradable assets, and everything. And once you learn about all that, then you're able to improve your trading. And hopefully on the next session, you're able to capture everything you need to. So that is it. Thank you, everyone. Enjoy the rest of your trading day.